Welcome to the Transparent FX Academy. If you're new to the channel, I'm Nick and I've been a top hodler on TradingView for many years, as well as being one of the only traders with a fully verified MyFXBook third-party track record. So if you want to elevate your trading, you're definitely in the right place. So subscribe to the channel, and without further ado, let's jump straight into it. So take a second, pause the video, read the disclaimer, and I will see you on the charts. In this video, I'll speak about silver. Now, as usual, to keep the video as educational as possible, first I'll give you the technical aspect for this market, then I'll move to the commitment of traders analysis to see what institutions in the market are doing, and then I'll put together these two different types of analysis. So this is definitely a video you do not want to miss. Now, starting here from the monthly time frame, what we can easily notice is a massive uptrend. The market has been fueled by strong institutional buying, as we will now see, and created a series of higher highs and higher lows, and then this massive impulse to the upside. Now, after such a huge push to the upside, what you would expect is a correction, because all healthy uptrends are composed by a series of impulses and corrections. If the market is just going up in a straight line, it is an unhealthy uptrend, and at some point it will need a correction for new institutional buyers to step in. So a strong push to the upside is always followed by a correction. It's just a matter of time. And right now it seems like the market is starting to lose steam, and that correction could very well be underway just around the corner. So let's keep that in mind and drop down on the weekly time frame. From a weekly perspective, what we just got is a strong impulse to the upside. The market has now completed this weekly impulse correction and impulse pattern to the upside. And what we can notice if we drop down on the daily time frame is that this push to the upside is exactly what we wanted to see from my last analysis. In fact, when the market was here, I made a full breakdown explaining all the reasons for which from here I was expecting this push higher, which is in fact exactly what the market just gave us. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. But at the moment, what do we have? Just a quick interruption. Let me know in the comments below if you have any new pairs or topics that you would like me to cover in the next videos, because I'm always open to suggestions. In this situation, we can notice that the way in which the market created this push to the upside is actually very interesting, because in creating this push higher, the market has also created a bearish pattern, which is this overextended W formation. I'm sure you have seen this pattern play out over and over in the market. You see an overextended W formation, and then the market rejects lower. We can see it, for example, also right here. We had this overextended W formation, and then the market rejected lower. So this increases the probabilities that we could very well see bearish price action being created away from this zone. Now, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing and how they're moving and shifting their orders, if we look at the data for silver, we can see that they are in fact expecting that correction, because net positions have been dropping massively, going from 55K actually here at the high, all the way down to 37K, one of the lowest levels that we had for quite some time. So institutions are now moving back to the bearish side for silver, adding shorts that went from 18K up to 23K. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description so you never miss new updates. Now, back to the analysis. So in a situation like this, we do have a bearish pattern, the bearish W formation, overextended W formation that we have just identified. And in a situation like this, there is definitely an increased probability of seeing even more institutional shorting, since already we have seen that they're shorting, and that would increase the probabilities of a rejection lower and completion of the pattern. So what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive, as my students know very well. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, if the market would shift from an intraday bullish to bearish market, I wouldn't be surprised to see a potential rejection lower, completing this overextended W formation that definitely wouldn't surprise me. Now, everything that you see me share here on YouTube is just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you head over to my website, which you find linked in the description. Here, you have the possibility to gain access to the best mentorship program in the world. You can get all my courses ranging from the very basics of charting all the way to the more advanced topics. You also have the possibility to gain access to the trading station software with the Telegram notification integrations, one-on-one private mentoring directly with me, the COT data software, which is the software that you often see me use in my analysis. And you also have the possibility to gain access to the entertaining live trading show. So essentially a live stream of all my trades as they're happening live every day. So my entries, exits, how I manage the positions, all streamed live every single day essentially in this Telegram channel, which is obviously private just for members. You also have the possibility to gain access to all my EAs. So essentially all my strategies, which you can then customize to your own preference. And here you see breakdowns of each and every one of my strategies, including a 10-year historical backtest of the strategy on high quality tick data. So essentially backtested on live charts. So basically, I would suggest that you go and check these ones out. And if you continue to scroll down past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So I really suggest to at least go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you drop a like and a comment. It really helps with the creation of new free analysis and education, and I will see you in my next video.